Hi, everybody. I'm Ross Healy, the chairman of Strategic Analysis Corporation. Welcome back to Friday Focus, our SVA in Action series. Now, last week I introduced you to what I called price inflections. That is those two cases. First, where a stock rises up to a breakpoint, and the second, it falls to a breakpoint. In both cases, then, there is a powerful tendency for the shares to rebound. And I showed you the subsequent performance was quite significant, and can be very profitable for the active trader. However, let me tell you that while those events take place with considerable frequency, in my experience, the stocks usually do not sit around and wait for you to make up your mind what you want to do with them. If you're going to use the SVA signals for trading, for inflections, you've got to be ready for those opportunities. Last week, so what happens when stocks reach those boundaries? But then this is a very happy circumstance, because now you will be able to take advantage of what is essentially inside information, but it's entirely legal and profitable. So let's take a look at my two zone transition charts here and see what I mean. In the first case there, we're showing what looks like a breakout. A stock moves up to the break point. It will set back. It will set back. But then it gathers its forces together and breaks out. And when it does, well, you can see what the results are. They tend to rise at an annualized rate of about 44%, according to our long-term studies. The last example happens with a stock that comes down to a breakpoint. Now, last week I said when it hits that breakpoint, there is a nice tendency for the stock to inflect and rise at a 33% annualized rate. However, the stock comes down, it will have a little rebound, but then it breaks down below. And when that happens, does the stock become a lot cheaper? No, it doesn't. It's basically giving you inside information that there is something amiss with the business outlook for the company. Now, very often, you will not be able to find out what that actually is, maybe for some time. I remember a few years ago, Corp came down to a breakpoint, had a little rally, and fell below. It took about another 4 months before we found out that the problem with Cot was that sugar prices were up, tin prices were up, but their biggest customer, Walmart, refused to allow them to raise prices, so they had to eat that difference. Needless to say, their earnings collapsed and the stock price had quite a big fall. However, as I say, we did not find that out for some period of time. Anyway, what I'm going to do now is I'm going to show you two examples of a breakout and a breakdown. And the first one I'm going to show you is a favorite gold stock of mine, Alamos Gold. And Alamos had been doing fairly nicely, but in early 2024, the stock broke out over its growth price. That's one of the principal breakpoints in our work. Well, as I indicated to you, when we get a breakout like that, we typically are going to get a move of about 44%. Actually, Alamos went up 75% there, so it certainly met all of our criteria. My second example that I wanted to show was the example of a breakdown. And here was Intel. Look at that for a long period of time. Intel hovered above. Actually, it traded between its growth price, that's 2 times book, and its super growth price, which is 3.5 times book. But In 2021, the stock broke down below the growth price and rendered a major sell signal when I warned you now that when you got that kind of a break, the stock would decline at about a 36% annualized rate. I was mostly right. The stock actually fell to its normal price, its price to book of 1, so from 2 to 1, it fell 50%. And by the way, one thing I want you to note is that when you get a breakdown, actually a breakout or a breakdown, there is typically a breakdown and a pullback. You see that little pullback before it checks down? It's this, the stock is saying, is this real? And if it's real, okay, then we'll go for it. And that is precisely what happened here. Now, there was, of course, okay, now we fall down to the normal price and we get a nice rebound. And as I said, that rebound will typically be about 33%. In point of fact, the stock almost doubled here before setting back once again. Anyway, all this and much more is in my book, Inside the Market, which is just about to come out. And when it does, I will tell any of you who may be interested how you can order a copy. In the meantime, please do have a safe and profitable week, and I'll see you next Friday.